Hi, this is Randy Finney with the Right Side of the Chart, and today is Thursday, September 13th, 2018. In this video, I'd like to do an update on the GDX official long trade, as well as gold, the US dollar, and the euro, as they're all interrelated. Gold, technically you could call it a sister trade to GDX, although I'm still waiting on that buy signal I talked about. We'll get to in a second. We had a little whipsaw signal on the gold futures today, but again, we'll get to that. But I think it's a good time to do this video. There's been some questions about the miners today, and I want to share my thoughts. So here we go. This is GDX. The official trades based off the 60-minute time frame. As I said, I will most likely make these official targets. I'll set the exact levels. These are the resistance levels where I expect a reaction, and so I think if the charts continue to play out as I expect they will, and I'll go over those in a second, everything still looks good for the case that is for I'm talking about a major bottom in gold. So again, if that's the case and gold does bottom and starts to move higher here, continues to firm up that case, the case that a bottom has been put in the gold, a top has been put in the dollar, then we can extend these targets. Heck, may even allow it to be a runner trade. Might zoom out to the daily charts. That's usually what I do. But I use the 60-minute charts often as my to hone down entries and exits on trades. And right now that's what this one's on. So enough on that. There it is. 1850 was the first resistance level, and we reversed just shy of that. So effectively, we hit it yesterday, and that was that little gap right there and some reactions. But the first target remains 1939. At this point now, we'll have this downtrending line come into play first. So what it might look like, although I would not try to game this, in other words, try to get out, it may look something like this, maybe there, and then go on and break out, hit that first target. Um, and we may keep on going. So again, if I do raise the targets, I'll always raise a price target before the final target's hit. So right now that's still the final target. Just need a little bit more in gold in the dollar, but let's get into that and I'll talk about it here. So, I didn't even mention. I did mention yesterday we had the bullish falling wedge on GDX. You had a pulse of breakout. Still, those divergences are still well in place. They managed to come very close, but miss our stop, which was a daily close below 1750. So far so good on this trade. And again, I like it. It's maybe a little flagging type consolidation, flagging type action right there. And if we can pop out of there tomorrow, maybe it'll look something like this. And again, not to get ahead of ourselves here, because there's still a little work to be done to firm up the case for a reversal. But this is what we're looking. It's pretty thin all the way up here at about 2112 or so. By thin, what I mean by that is very few. If you look at a volume of price histogram, I don't have mine up right now on the chart. Very few trades. This was a pretty swift move, and for over almost 2 years, that level, that 2112-ish level, called 2110, somewhere around there, $21 if you want to be safe. That level acted as a very, very strong support level. And then when support was broken, as is the case in technical analysis, the better the support, usually the more swift the ensuing move once it breaks. That's what we got. And so at the very minimum, if we get this, the charts firm up, I'm looking for a move back up here to 2112. Still some work to be done, but if we get there, we'll call it $21. Let's just call it 21 to be safe. It's about a 16% move in GDX. You can magnify that by 3 times or more in Nugget. What I mean by that, and I've talked about it in the past, I don't want to get too off topic here. This rip right here, you would have vastly done better, much better, and I put it down. I did the numbers before in a video or on the site. You would have done much better than 300% or 3 times the return of GDX had you bought Nugget. This is when you want to own those leverage ETFs in unidirectional rips, just like you want to own Dust right here, the 3 times short. You actually do better, and I talk about that on the FAQ page. If you're new to the site, go to Resources FAQ under the ETF Questions tab. I do the math and show you how 3-time leverage ETFs can either work for or against you when you don't want to own Nugget or Dust or any leverage type ETF is this sideways trading action. That'll just eat you up. The decay will grind you into pieces. You'll lose more than the underlying. Here you went nowhere in GDX, but you would have almost certainly lost money in Dust or Nugget, even though you were in a sideways trading range. So that's that. And now let's look at gold and dollar and the euro, and we'll wrap this. Okay, we'll start out with the dollar because as I said, I am more concerned on where the dollar goes and getting, if I get the call right for a major top on the dollar, which I still believe was the case to be made right here, then I will get the call on gold right. Gold will follow. There's, again, if you're new to the site, you have to look at some of the recent videos or those in the past or charts on the site where I've showed an unmistakable correlation between the US dollar and the price of gold. They have an inverse correlation. Dollar goes down, gold goes up. So that's why I like to look at the Euro US dollar chart as well. That's, it's going, that will trend in the same direction as gold. So what I see here, again, same story. We had a bearish rising wedge pattern right there, just like we had a big bullish falling wedge pattern here. Bullish falling wedge, divergent low at this point. Boom, that led to the rally. This is a bearish rising wedge. We broke down, had a little kickback rally to this support, or I'm sorry, resistance zone right here. There's a resistance zone. I'm trying to use another tool, but that's it right here. That's our resistance zone, failed there, and we're moving lower. So all we need to do now is take out that previous reaction low. I think we will. This looks like a legitimate breakdown, and that should bring the dollar down to at least this next support level here. I'll give you that if you're trading UUP, which is the dollar ETF we're looking at here. That's 24.74, give or take, and you can see some additional downside targets. So there's the case for the dollar. You look at it on, well, let's go to the Euro US dollar now. That's my favorite charting proxy. I can also get a better direction here because this will show you it's trading around the clock. You can look at dollar futures too, DX. Those trade around the clock, but that's the dollar index, by the way. But here's the big picture. This is a Euro US dollar on the 10-year. I haven't covered this recently, but I've covered it a lot in the past several years. You had this strong basing pattern here in the Euro US dollar pair. And remember what you're looking at. This is the euro against the dollar. So when this is falling, it means the euro's dropping, the dollar's rallying, and vice versa. So you had this strong basing pattern on a weekly time frame. To me, that's more significant than a daily time frame. This shows strong, very clear, unmistakable bullish divergence at that low. We broke out the euro US dollar, broke out, or the euro broke out against the dollar, let's say, came in and successfully back tested the top of that 2.5 year trading range. And right now we fall into the bottom of that range again. And this is where I'm looking for a reversal and the next leg up to this, at least this target here and quite possibly beyond, because again, this looks like lasting bottom action. So again, a lot of still some ifs left. Now we go to the daily chart. This one walked it all the way up, had all these annotations all along the way stating we'd get a sell signal in this trend line. There was a well-defined trend line. We had a divergent high here. We had a big correction back in the euro US dollar there. That played out, hit the trend line, hit my first and second target zone. I believe I had two targets there. Hit the second one of the penny, reverse, went up here, and then we broke down, and that's that. So most recently, again, this is more of a recap kind of thing if you're new to the site. We have a well-defined support level here, a lot of reactions along this support level. And so the scenario I laid out, one of the scenarios I had here was a bear trap scenario before it happened, meaning you break down, break a well-watched support level, which happened. Euro bears flood in, dollar bulls run in, thinking the dollar is going to go up forever, and they got burned. Fewer things in trading are more bullish than a failed bear than a failed bearish breakdown or bearish setup, right, like this. So we had the breakdown, proved to be a whipsaw signal, snapped right back against that support, and so far so good. It has held. And as I said, recently we were coming up to trend line resistance right here. Expected a little reaction. We got that. So what we need to do, and this is the bigger picture here, we need to break above this level, break above it with conviction. Also put these recent highs in the rearview mirror, and gold should start to really take off, of course, with the miners as well. So now coming down to that 60-minute time frame, most recently I was highlighting this level here, 116,582 on the Euro US dollar pair, again 60-minute chart. And you can see lots of reactions there recently, lots of reactions, well-defined level, and we took it out today. And we're still up, and we've held that breakout. So I made a lot of, if you're a silver member watching this video, I have put a lot of commentary in the trading room on this today. We have some cross currents. I'm going to get to this charts of gold here in just a second. We had a whipsaw signal, failed breakout on the gold future 60-minute chart that I've been watching closely, that 213 level. I'm going to get to that here in a minute. That failed and gold fell back down, and gold is down today, but yet this breakout is stuck. And I've said this before. I think that, in my opinion, the outlook for the US dollar and the euro is as much, and if not more important, than what gold's doing right now. Now, of course, I do want to see gold take that back, that 1213 level on gold futures. Um, that would certainly help firm up the case. But right now, as of now, this breakout is held, and we seem to be flagging, at least consolidating here. So maybe another thrust up to my next target here. And I can all but assure you, if the euro does this, makes it up here to that 117,483 level, that gold will break out of that 213 level and we'll have a pretty good rally. So let's just hope this holds right now. That'll help our GDX trade as well as, again, if you're long gold futures. So let's roll into that. And again, that's not normally I would lead with the charts of gold, but I think this is, at least to me, one of the most important things to watch right now are the currencies, and that will determine where we go. So here it is. This is gold 60-minute. These are gold futures. The symbol is GC, and here's this is the level, very well defined line right here at 213 on the futures. And remember, gold futures trade around the clock. That's why I'm looking at this chart and putting a little more effort into it than GLD, which only trades, from at least on the regular session, 9:30 to 4 p.m. So there it is, lots of reactions. There was a little whipsaw signal. So, and that's what we had today. And this one's actually brief. This one was over before you knew it. It wasn't, I often talk about breakouts with conviction or impulsive breakouts. That was far from it. We just popped our head above it, fell back down. But again, normally I would say, well, that's pretty darn bearish. And again, on face value, it is that we popped above there and fell back. But as long as the euro US dollar holds above that level I just covered, I do think we're just going to have a little more consolidation here under that level. And eventually we're going to go on to take this out soon, very soon. And like I said, if the euro can continue up to my next target, we'll probably see gold futures have a nice rip up here, probably towards somewhere around this level at least. You can see some potential targets that I have listed right here. These are all resistance lines. So that's how it looks on the futures chart. The GLD, I'll show you the daily because I do know I understand that a lot of you trade. Let's grab my futures chart or the GLD chart. A lot of you trade the ETF. So there it is, GLD. You had this price channel. We broke above it. That looks good so far. The breakout hasn't had a lot of follow through. We've been consolidating since. I had a level here at about 114, but forget about that right now. We just need to take out the recent highs. That'll correlate with that level on uh, GC that I just showed you, the 1213 level. So that's what we need to do on gold. Take out the recent highs. I don't know if I have anything marked up on the 60-minute chart. Nah, not on that board. But I wanted to point out a couple other things. Remember, gold isn't the only precious metal. I highlighted recently on the site platinum I like. In fact, if trading one of the metals, platinum, I think you could probably have a little more bang for your buck than gold. We don't have a platinum miners ETF, so you can trade gold miners ETF, silver miners ETF, but this is platinum. And there's that 75, 90-ish level that was taken out today. We had a little period of consolidation under that level, one little pop above. So far, so good. It's not super impulsive yet, and I think that's also because gold's holding it back right now. But look for a break of this trend line and then move up here to 80.28 and 83.49. Again, this is PPLT. It's my if I was going to use an ETF instead of futures, this is the one that I would use. There might be some others out there, but I follow and track this one as well. So there's another trade idea for you. Oh, by the way, of course, I've mentioned this before. Positive divergence, just like we had all here. All these divergent lows are marked. You can see what happened after each and every divergent low. Divergence in itself is not a guarantee that a security is going to go up. It's not a buy signal, but it is an indication that a trend change or a rally is likely when you have this bullish divergence. So that's that. And silver, of course, the other, well, we could look at palladium, but let's just leave it here. Here's silver ETF. I see divergence here on the 60-minute. This is a busy chart. Forget about everything you see over there. Just know that it looks very similar to gold. In other words, you had pretty much a support shelf around this area right here. What is that, about a little under $15. It broke down just like gold did, or the miner stocks, the miners, what I showed you earlier, and gold pretty much. And that's your potential swing target. And that would be a nice pop in silver if we got there. This is again the ETF SLV. So let's just say even to right here, 1472, be conservative. That's about a 10% run So that's silver. Again, bullish divergence in the RSI, not the PPO, but you don't have to have divergence to you know turn or put in a bottom or to rally. It helps, but again, that's why I pointed out you do have some divergence there. So that's it. Bottom line, to sum it up, I don't think it makes sense to be aggressively long gold or the miners at this point. But I think once we take this level out and you start to see impulsive buying, again, that'll be another notch, another check mark in my case. I have a lot of check marks already on the, and of course have the currencies cooperate at the time, which they should. Then you have another check mark that we may have a likely bottom put in, a tradable bottom, and I'm talking a swing trend trade bottom where you can put away gold, keep a stop under your entry level, maybe scale in over the next few weeks, few months. But when I scale in, there's two ways to do it. You can scale in at time over time. That means putting small lots, buying small fractions of a position, building your position. Or I like to do what's called strategically scaling in, and that would be, say for example, and I'll tell you, I took a contract of GC on the breakout, and normally after the failed breakout, I'd let it go. But like I said, I'm okay with that. As long as that euro holds that breakout level, I'll give it some room, but I'm not going to add. I would scale up on this position. If we go ahead and break out, then I'll add another contract or so. But right now, I'm just good with this. Hey, if they go much lower, if the euro starts to reverse collapse, that whole scenario, the outlook for the near-term outlook for the euro and the dollar, if that changes, then gold's going to come down here, and if it goes much below this blue line here, about 1183. Oh no, that's 1189. Now about 1190 right there. It's not going to look so good, but again, I'll also keep an eye on the charts of the dollar and the euro and everything else. So that's it for now, and I'll post any updates. But this is probably, as far as gold goes, I think the most important level to watch right now there. And then if we do take that, of course, now we have another reaction high at this point. We had these reactions here. So the next step, by the way, to really kind of solidify that breakout would be a move over about 1220 or so in gold futures. Okay, let's wrap it up here. This has been Randy Finney with Right Side of the Chart. Hope you enjoyed it.